The Boeing 787 flights used by Air India have them. The Pratt and Whitney engines that power IndiGo's or Interglobe Aviation's aircrafts have them. The light helicopters manufactured by defense aviation major Hindustan Aeronautics have them. I am referring to very critical components inside the engines of these aircrafts. Any guesses where they are manufactured? Well, Titan Engineering and Automation Limited, TEAL, a wholly owned subsidiary of Titan Company, makes them at the engineering company's plants at Hosur in Tamil Nadu. When one thinks of critical engineering components, we hardly think beyond the handful of well established engineering behemoths. But it turns out global geopolitical circumstances have opened up opportunities for several niche, smaller but credible players in this domain. Geopolitical circumstances are pushing most developed economies to de risk supply chains. There are investments being made in manufacturing all over the world, and that is where the opportunity lies for entities like TEL. Titan Group already had precision engineering skill sets thanks to its watch manufacturing unit. TEL too has well trained manpower and the ability to build precision components at scale. As automation rises, TEL can compete not only on the competence of its people and the solutions it can provide, but also on the fact that it can be hugely cost competitive versus global peers. To keep its talent base growing, skilling oriented schools such as the Tata Institute of Skilling have helped TEL meet workforce requirements as manufacturing grows in India. Over its 2 decades of operations, TEL has utilized its engineering know how to create innovative solutions for new sectors. The know how for micron level precision, for instance, led to TEL exploring adjacent opportunities in manufacturing services. A micron, for those who don't know, is 1 millionth of a meter, say about 1/10 of the thickness of a human hair. TEL started with making some panels for spacecraft. Today, one of the biggest customers of TEL is American aviation major Raytheon Technologies. Under the Scheme for Promotion of Manufacturing of Electronic Components and Semiconductors, or SPECS, TEL is in the midst of a debt-funded capex of Rs 2.2 billion over 4 years. The company plans to establish a unit for manufacturing parts for the semiconductor industry. Additionally, over the next 3 to 5 years, TEL will undertake capacity expansion to grow its aerospace segment, which is expected to be funded through internal accruals. TEL currently accounts for a tiny fraction of parent Titan's revenues and profits. However, the engineering and automation company has enough potential to de-risk Titan's gold-dependent business in the future. Titan's stock price has demonstrated a strong correlation of 0.9 times with gold prices over the past 20 odd years. This is because the jewellery division or Tanishq has dominated the sales and profits of the company over all these years. With several listed jewellery stocks, Titan now not only has stiff competition in organized jewellery retailing, but it also needs to consistently outdo its peers in managing tax implications on gold inventory, etc. Titan witnessed margin pressures last fiscal due to steep rise in gold prices and competitive intensity. However, the company took steps to address the margin pressure with new product designing, sourcing, pricing, innovation, product mix, and improving operational efficiencies. The recent cut in the import duty on gold to 6% from 15% is expected to boost demand in the short term. From the beginning, Titan adopted the franchisee model to scale up fast and develop an asset-light business model. But most importantly, the company tried to limit the cost of inventory over the years. Around 95% of the investment required for jewelry store goes into inventory. Exchanging old gold with the customer is cheap as you don't need to hold inventory, and usually a customer purchases more than what they exchange for. Therefore, Titan has tried to increase its volume of gold exchange over the years. Also, buying gold from the spot market is neither cheap nor capital efficient. Plus, the jeweler gets exposed to the risk of gold prices going down. It is efficient to lease gold from the banks by paying around 4% annual interest. This reduces working capital requirement and hedges the company against downward movement in gold prices. Titan has therefore always utilized its good credit rating to lease gold from banks for Tanishq. Both these measures have ensured that the supply of gold remains consistent despite the business being asset light. Going ahead, the company plans to focus on the impact of lab grown diamonds for Tanishq's studded business growth. Also, Tanishq has expanded its global footprint by opening new stores in Dubai, Singapore, and Chicago. This expansion enhances the brand visibility and provides access to new customer segments. Currently, the company has 16 jewelry stores globally. So, the luster of gold in Titan's business is here to stay. Meanwhile, the watches, eye care, and Indian traditional wear business segments continue to report modest growth. However, none of these have managed to counter the volatilities of the jewelry business. As India gains credibility in terms of globally competent base of engineering and semiconductor fabrication, subsidiaries like TEAL could offer Titan the much needed benefits of diversification. So the stock of Titan may continue to remain volatile in the near to medium term, especially since its valuations continue to remain above long-term averages. Also, slower growth in earnings and margin pressures could cloud the stock's near-term market appeal. Having said that, long-term investors in the stock could count on the possibility of Titan unlocking value in subsidiaries like TEAL that could go on to contribute one of the highest share of profits for the group in future. Hope you like this video. Thanks for watching.